Hello and good afternoon, everybody. This is the Middle Class Investor. It is 1:50 on Saturday afternoon, and we're looking, as we always do, at the S&P 500 from the 2009 low, which occurred back here. This has been the rally, the bull market, I think the longest bull market in history, without any kind of substantial pullback. At least in recorded stock prices. So, we've been beaten up against this upper trend line for a long time now. I mean, if you go back to here, just since April, it's been busting up against this, and we're marginally higher. I mean, we talked about this. We've talked about this before on here. That how long do you stick with it when the market's moved so much? I mean, back here, it was at 29.33, and today it's at 3,066. Is that amount of gain? That little bit of gain there. In fact, if we just analyze it just kind of quickly, whoops. What I mean by that is, let's just do it in retrospect, which you never had the luxury to do in the market, but let's just look at it like this in retrospect. So from here to here is your potential gain, but look at what you had to risk, for that little bit of gain. And this becomes the problem. You had to risk all this to get that. And this is kind of what generates some of the psychology when it starts selling off. You're like, God, I wish I'd have sold, and this time it stopped and rallied into a new high, but there's no guarantees that could happen. It could have easily rallied up to here, let's say, and then started lower. So, when you start bumping up against resistance, I don't know. Sometimes I just look at it and go, for that little additional money, used to be you could put it in a money market and you could make some money just in a money market. Of course, now with the Federal Reserve and these low rates, it's really hard to do that. But it's just a lot of risk here, and we're kind of in that same position now. You got potentially, you've got some more upside, maybe up into this area, up in 3,200. But now the downside is, this down to 2,100. So it's just, you have to kind of weigh those things. Whoops. And that's why I point them out here, because a lot of people don't think about that. They just think, well, most of us have been conditioned to just think that the market just always goes up. And over time, over long, long periods of time, that is true. The market goes up because basically, as a human race, over time we're more productive. Okay, so that shows up in stock prices. But there are periods of retrace that depending on where they are on the time scale and then the magnitude of those retracements, you may or may not want to be in the market taking those risks. So we've talked about that before, and so there's nothing new there. But the pattern that we've been looking at is still very much intact. So what we're expecting, or what I'm expecting, I should say, is a move down into here, and then later down in here below 2,200. And then after that, I mean, not for sure after that, but depending on what this looks like, after that, I'm expecting a rally to new highs in a fifth and final wave. Having said that, we'll have to see what the market internals are as this falls, because there are certain types of internals that we want to see as we come down into this support area, and if we don't see those, then we may wait a little longer before taking action and getting into the market for the upside. All right. Let's look at let's see what I want to look at. I want to look at oil. I don't have any of my lines drawn on here. I need to do that. Oil, you know, as we've talked about, is in kind of this large A, B, C pattern with maybe C is not complete. It's very choppy looking, and C would manifest itself by looking like one, with all this being 2, 3 down to here, 4. As long as we don't go above where we are right now, this is still potentially a wave 4 consolidation sideways. If the market were, when I say right now, I meant the most recent high right here is $75, $76. If we start going above that, then this pattern is probably that would bode for C being complete right here, and this being the new trend upward. But right now, it still looks to me like this is sideways. So, I hope that's clear. You know, the reason that is the way it is because there's a rule that says 4 cannot travel back into the area of wave 1. Well, this looks to be wave 1 down right here. Let me draw it here so we can all see it. Let me draw it so we can see it. So this appears to be 1 into here, and this is some sort of, you know, triangle flat or something up into 2, up into here. Whoops. Let me try that again. 2 into here. I mean, excuse me. Yeah, 2 into there, and then this is all, looks like this is all 3. And if this is all 3, then if this is 1, then this cannot travel back into this area but around 1, which is this zone right in here. And you can see as of right now, it's you know, it got right up in there, but it hasn't traveled into this area. So, and if it does, then this can't be 4. This is not 4 if it travels up into that area. Alrighty, hopefully that's clear. You can get online and read a little bit about Elliott Wave and some of the rules. It's pretty, you know, most of the rules are pretty simple. When you start getting into triangles, there's all kinds of different rules. But generally speaking, wave 4 can't travel into wave 1, and that's a pretty firm rule. All right, let's look at the euro. You know, the euro looks, you know, it topped up here, kind of ground its way down here. It looks like the low is in. The euro is I mean, it's made a pretty strong move. It looks like it's not done yet. I would say you know, you're probably looking at maybe 1.13 before this move is done, and then we'll retrace some of that down into maybe 1.107, and then we'll get the next leg up. So that's probably what's happening in the euro. If you look at, you know, one of the things we've been kind of looking at or keeping an eye on is the British pound because of Brexit. I would say the same thing about the British pound. I mean, we had this huge, what looks to be an ABC pattern into a low, you know, a move off the low, and then a retracement that looks somewhat overlapping. So now I got a strong move out. So this looks to be the next move out of the euro, and I don't know. I think the British people should be happy. I mean, you know, a strong currency is always better than a weak currency. I don't know why there's so much talk about a weak currency these days. A lot of it has to do with people believe their exports would be better if their currency's weak. Well, yeah, but your people are poor, so, you know, I don't know. It seems like to me you'd want to have strong purchasing power of your currency and let the other chips fall where they may. You know, in a free market, you know, businesses are they're encouraged to keep their costs low and be competitive. And I think it's better to have a strong currency and let companies figure out how to be competitive. All right, let's look at gold and silver. Gold, Again, it's another one of those that looks like it's potentially done on the rally. We've got it labeled here A, B, and now we're looking for C, which would be down in this white box, this white rectangle that I have. Silver's a little bit not as clear, mainly because it didn't go quite as high, and silver might actually make a push up higher, and gold could too, by the way. But silver looks like it wants to make a push a little bit higher, maybe up here into this 22 area. I don't know. It's a weird looking pattern. I would have expected silver to already be up here, maybe already be here, and maybe pushing into the 25 area. But that is not the case. So we'll just have to wait and see a few more cards come out of the deck so we can see what happens there. All right. That's really about it. I'm gonna keep it short this week. Apologize for last week. The video that I recorded did not upload to YouTube for some reason, and I couldn't figure out what the deal was. So, and I didn't figure it out I didn't notice until a couple of days later. So I ended up just not making another video for the week. But hopefully I got that solved. Occasionally you have these little technical difficulties, and takes a little while to work through them, so apologize for that, and hopefully it didn't happen again. All right, everybody, thanks for coming in this week. Let's have a brief look at the markets. Before I leave, let me just talk about the S&P 500 a little bit more. And talk about, what we might see over the next week. It's possible. It's always possible, right? It's always possible that the market is already topped. But this doesn't look like a normal throwover, so I'm going to say that we might get some sort of gap down on Monday and then a run up to a little bit higher prices. And then maybe by Tuesday, sell off back into the triangle. Now, one way you can tell when the move is definitely over is, so let's say this happened. Let's say the market ran up like this, and then let's pretend these are daily charts, and so that's Monday, and then Tuesday maybe even ran up a little higher and it looked like that, and then Wednesday it looked like that and closed right here, closed right there. Then this would be over. This move would be over. We have a slight throwover with a follow through to the downside and a close inside the trend line. That means no more upside. So, look for something that looks like this next week. Again, maybe Monday, Tuesday, with some news, it spikes up and then turns around, sells off. And then Wednesday opens flat and then starts running down, closes lower. So if we get something like that, then we are done going up, and I think that's somewhat likely that would happen next week. So keep your eyes open and be ready to take action in the market. Taking action is what is what keeps you from losing money. I mean, it can cause you to lose money, right? If you take action, you're not patient. But one of my teachers used to say, trading and investing is a decision-making process. You just go from decision to decision to decision to decision. And that's how it works. So don't be afraid to make decisions. If you get out and the market shows that you're wrong, you can always get back in. There's there's some rules in your 401ks. But the market's not going to do that much. If you were to get out, you're not going to miss that much. As you can see, it always gives you kind of another chance. Tends to. Just so happens that maybe the next chance might be a pretty big move. So always be careful, be vigilant, and good luck to you. And we'll talk to you next week. Thanks, everybody. Appreciate you coming in. Bye-bye.